Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The US dollar index, which measures the greenback's strength against a basket of 6 major currencies, slipped further overnight and dropped back towards a 106 handle from 106.60. In light of that, the market was a little bit confused due to the fact that the initial jobless claims came in seasonally adjusted at 207,000, missing the forecast of 210,000 claims last week. From that, the dollar is a little bit still on the shaky ground, which is supporting some of these markets, and now potentially expecting to see the Australian dollar climb higher to 63.90 as it edges since rebounding off that key support level of 62.80. Reassess from 63.90 as we could see an extension to 64.45 as we wait now for the main event for this week, which is the US non-farm payrolls. Presently, the forecast supports the US economy adding around 171,000 jobs in September, with the unemployment rate expected to slip from 3.8 to 3.7. With the main event, with all eyes expecting to see a number that's coming around that 171,000, could see much volatility. Still, the upside is holding as the indicators are firming up somewhat and therefore looking towards 63.90. Euro is also staging a slightly upward bound as it marks on towards the level of 105.65. A break there will see further scope up towards 106.25.35 and reassess. If the dollar can slip another 50 points, this would see further support for the euro and many other currencies, with any pullback likely to be shallow. The dollar yen plummeted in yesterday's session and still holding to a negative bias after the last 3 days and rumours of the BOJ intervening somewhere around the 150 handle. Looking into today's price action though, 147.70 looks like the next challenge, and reassess from there. Any upward advance should find difficulty, with the market likely to see a cap around 148.60. Sterling is posting a bullish outside range that is confirmed from the break, that is of 121.50, and now looks on towards the region of 122.70 as a potential target. I like the way this pattern is unfolding, and therefore still keeping an eye on this trend line as well, which is seen around 124. Technicals are bullish since the bullish divergence kicked in, keeping an eye on this MACD as this will also support the case to the upside. But as I said, the candles are strong, so I do anticipate a move to 122.15 to 122.70. Gold still somewhat in a mixed pattern as it consolidates around 1,820. We haven't taken out the base, and as we can see, there is a few spikes here, which suggest there is bids forming lower from around that bottom side of 1,800 to about 1,810. I'm not getting bullish here. I'm just keeping an eye on how this pattern is unfolding. We are extremely oversold, so therefore, no doubt the market would feel that there is a possible or warrants a rebound that could see a rise up towards 1,840. But as I said, the market is still testing the downside at the present, but there are bids forming close to that bottom side of the range. The extension to oil continues to the downside. After that heavy candle of 6%, the market has now achieved its target of $81, and now we are reassessing as we are somewhat oversold. If this pattern does continue lower, then we could actually see from $81 down towards the region of 78.80, which is another key point. Still, the technicals are heavy. There is a trend to support the bear case, so I won't rule out 78.80 as an initial target, and to see how $81 plays into today's session. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the interest report. I hope you enjoy the great starts on the new weekend.